Now to one of the biggest pressure points that you have told us about, insurance. And to guide this session, please welcome our moderator, Sue Monk from Articulus. Sue is a seasoned facilitator and communications strategist who specialises in complex industry government conversations and live audience question and answers. Now joining Sue on stage, Paul Davenport from Affinity Insurance Brokers, Andrew Bassingthwaite from Accelerate, and John O'Sullivan from Experience Co. And as our team of panellists make it up here to the stage, I can tell you Paul has spent over 2 decades shaping risk and liability programs for the tourism and equine sectors, drawing on his background in adventure operations and emergency management. Today, he leads Aon's equine tourism and leisure team, bringing real-world insights into managing liability across high-risk tourism experiences. Andrew Bassingthwaite is a CPA and founder of Accelerate, where he's focused on making public liability insurance more sustainable for sectors like live music and tourism. His deep experience in economic loss assessment and risk analysis helps small operators better understand and navigate insurance complexities. And lastly, John O'Sullivan leads Experience Co, one of the country's largest adventure tourism operators, and knows firsthand how insurance costs can make or break business growth. As chair of TTNQ and former MD of Tourism Australia, he brings a sharp industry lens to solutions and advocacy on his issue. Of course, we will be taking questions via the app, so plug those in as you listen to Insurance in Tourism. Sue, over to you.
Great, thank you very much, and welcome back after lunch, everyone. We've got a tough gig not only on insurance, but keeping you awake this afternoon. So today, I think everyone knows premiums, exclusions are all going up, and particularly in those high risk and regional areas. But today's session really isn't about theory, it's about the practical steps that you can take as a business to sort of try and improve that situation. And we've got a couple of brilliant experts up here. They're going to talk a little bit about presenting your risk better from the insurer's point of view or underwriter's point of view, how you can reduce incidents, and also using the right structures to get insurance at a price that you can live with. So without further ado, also, they're not going to be giving legal advice, but they're really going to be focused on, the actions that you can take away. So we might just first kick off just by talking a little bit about, we all know that the public liabilities costs are going up, but what are some of the key reasons behind that? If you'd like to kick us off, John.
Thanks. Thanks, everyone. I've never been introduced as an insurance expert before, but we'll give it a crack. Look, I think in all seriousness, there's a number of factors going on. You've got the provider of the service, they're profit-driven organisations at the heart of it, and they are under their own cost pressures. So you've got that factor. You've got the factor now that I think more than ever, you've got a far more litigious customer base. So if you think about, we see it in some of our businesses where you have an incident and the next thing you've got a letter from Slater and Gordon about, an injury, etc. So there's a lot more, litigation coming back towards the operators. And I think, those two factors combined with the fact that, in order to operate now, as a result of those two factors, you're seeing governments and property owners and people where you conduct your services requiring operators to have a high level of public liability insurance and regimes. So I think there's just a confluence of factors that have arrived on the scene right now for the industry, which makes it really difficult, particularly for the smaller end of the industry. And if you think about the structure of our industry, 80% of the businesses that are in the 269,000 registered tourism businesses in Australia, 80% of them employ 4 to 6 people or less. So that's really hard, particularly when you've got mum and dad operators who are mortgaging houses to provide a new boat or maybe not send their kids to private school so that they can keep their businesses going. So it's a whole confluence of factors.
Andrew.
Yeah, I just might add to that, John. The insurance industry, they're there to make profit. So you shouldn't lose sight of that. They're a business as well. They've got profitability measures that they have to meet with their shareholders. One of the big things that happened in post-COVID is that the cost of money for insurance companies got a lot more difficult and more expensive for them to actually attain. And that's what we call a hardening market. So because of that, their cost pressures are going up, their insurance premiums will follow. And one of the big pressures that's come on that is claims. The amount of claims has skyrocketed post-COVID, and it's been just a change in people's way they go about an injury, where they'll go and seek a lawyer and then try and escalate the amount that they can claim. So more cost pressure back on the insurance companies. Again, that flows through back into your premiums, unfortunately.
Paul?
Both of the gentlemen have sort of explained a lot of the issues that are facing it, and I think you've got to then add to that what's going on within the insurance markets themselves. Right now, you'll be hearing, in the media and everything about there's a soft insurance market in the liability, which means there's a softening. There's more availability of funds being funneled into insurance. But they're getting very selective as to where they go. So whilst prices are going down, that puts more pressure on those areas that are difficult to place. So, that type of market actually complicates things for areas like ours. I heard this morning something that I thought was really worth mentioning, and the young lady who mentioned up here on the stage, we need to identify and deal with the issues without catastrophising these issues. Our industry has done a very good job, our industry being the tourism industry, has done a very good job of saying how difficult it is to get insurance. And so, therefore, that has had a negative impact on insurers, because they're saying, well, hey, if it's a difficult market to get into, if it's a difficult and they're struggling to do that, then are there better places for us to invest in? Are there better places for we should get involved in?
It's an interesting one, isn't it? Because you can say that, and I guess that's looking at it through a particular lens, but as an operator, it is difficult. We're pretty lucky. We've got a bit of scale. We can, we've just done we've got about 30. We had 35 policies going into this financial year. We've whittled it back down to about 20, and we were able to do an insurance broker tender, which then drove that cost down. And you're right, there is a softening in that, but it is hard for the industry to get through it, because it is, it's 4% of our cost base. And that's a big chunk, and so I think, and I know you're not trying to not trivialise it, but it is an issue for the industry that I think they do need to talk about, because, as I said before, a lot of these smaller businesses are making a lot of sacrifices to be able to keep these operations going, provide these amazing experiences. And the claims and then the costs, it makes it just harder to operate. So I just think that's an important lens that we can't lose sight of.
100%. And I guess out of that, which is a bit of why we're having the forum here today, it's sort of like, there's different classes of insurance that we're talking about too, and we're focusing on public liability here. But these different classes of insurance, the actual solutions are all seem to be the same. And so, a lot of that was mentioned this morning about, selling yourselves and not selling yourselves short, being proud of what you do and recognising that you're good at what you do, and then recognising what others need. So those risk management pieces, which we're going to talk, I expect, quite a bit about doing it. But I think understanding what the insurance industry is going through is important for us to understand what we've got to do to engage with them. Yeah.
So, just on that, Paul, what are the options? So I think we were talking earlier just about some of the options for insurance for different tourism operators. Perhaps if you could talk a little bit about that.
So options for?
Public liability.
Yeah, look, I mean, you'll get common threads throughout the discussion, because it's the same discussions being held in various circles, but making sure that you're actually asking the right questions, or being asked the right questions so you can give the right answers, I think is really, really important. Dealing with specialist brokers is going to be the theme that you'll get from me. You need to make sure that you're dealing with specialist brokers and they're dealing with specialist insurers. And we just heard from John that his business was able to attract a tender and to be able to build because of scale of what's there. The small to medium operators, we've got to still focus on making sure that we get the right people representing us in the market. I think that's a real critical piece.
Is there a misunderstanding around tourism businesses and what they do from an insurance perspective? Is that something that needs to be presented very clearly?
I'll be careful to say misunderstanding. I just think there's no understanding in many cases. Google.
It kind of goes to the point of having specialist brokers who know what the industry is about and how to present a business to insurers and underwriters, so that they understand what you do and the risk levels in your business, and then how to price your premiums appropriately. One thing I should add there is that don't shop around. In the live music industry, we've had a number of small venues around Australia who are approaching 4 and 5 brokers to go out into the marketplace to try and get insurance for them at a price. But all those brokers are going to the 2 or 3 underwriters in the industry. And if they get bombarded with the same business over and over, they just go, well, I'm not going to actually place this premium at all, and they'll just close down. And the broker that is representing you might be doing the best job for you as well. So don't shop around, pick a broker, pick a specialist who knows your business.
And there's just been a question here just from Stephanie Redland from Redland City Council talking about collective public liability for performers where they can sign up as part of a shared policy. So is that an option, whether it be peak body schemes or, collective insurance options?
It is in the tandem skydiving industry. It's insured by the sport from a public liability perspective. So every customer that we take up and throw out of a plane, 15,000 feet, we pay a charge back to the Australian Parachute Federation, and they've taken out the public liability insurance on behalf of the sport. And basically that means that a lot of those smaller, one-side operators are able to get that public liability insurance. So there is some good examples of that being where cohorts banded together to do that.
There are other ways, for example, the discretionary mutual funds, which are a hot topic at the moment. And essentially that's where the industry bands together and they all tip in money into a pool to cover the cost of any claims. Now there's 2 really big words there. One is discretionary, is that it's up to the discretion of the fund to actually pay out a claim. So they don't have to pay your claim. So it can be quite dangerous. You're tipping money in and you won't get the benefit at the end. Also, if the fund runs out of money, you have to then keep on chipping in to bring it back into a liquid position so it's solvent. And it's unregulated. So I'm always be very careful of discretionary mutual funds. Yes, they do have a place, but when you've got a high-risk industry or deemed high-risk industry pooling into the one fund, it doesn't work.
Yeah. Just the other sort of risks around insurance is sort of that place-based risks. So we're looking at sort of, property insurance and cyclones, bushfires, all those sort of things. What are some of the ways to sort of try and bring down those premiums, or, what can operators do to sort of try and in that space?
And this is where knowing someone, rather than necessarily knowing your business, your business, find someone who actually works in your industry. In this room, there is a whole lot of subsets, if you like, of the industry, and find a broker that actually specialises in your field to do it. And then be able to put your best foot forward. You need to be able to make sure that you can demonstrate that you've got the risk management in place, that you've got the documentation that can support that, that you're going through, that you've got the training, the induction processes that take place. You can demonstrate how you can manage, the emergency response type stuff, the emergency management. Your incident reporting is critical, making sure that you can understand this. It's especially in the liability field, which is what we call long tail business. It could be 7, 8, 9 years down the track before a claim even emerges. So insurers have got to actually bank on that long tail and the increased costs that take place in that time. So, having good incident reporting, making sure that we can keep track of things that are going on, that we can then avoid those frivolous type claims and get on top of those very quickly. They're the sorts of things that insurers want to get comfort levels on. So your business. If you can present that business and your broker understands the industry and you can present that business and how you sit in it to the insurer, then you're at a huge advantage.
John, you clearly do this for a living, is with skydiving being on the list, maybe not personally, but basically, how do you sort of reduce some of those risks? What are some of the steps that you take?
Oh, look, for us, it's really more around, at a practical level, it's around preventative measures in safety. It's about preventative maintenance. So on our aircraft and our vessels, we'll probably spend, upwards of $10 to $12 million a year in maintenance capital, and that's an important part of that's a really important part of that story. So And look, again, it comes down to, again, this issue. It's costly. It's costly for our business, so you can only imagine what it's like for a much smaller business to do that. But we spend a lot of money on human factors training at site, and then we've invested in technology to help us, track incidents, so we can identify trends. We can identify trends across different parts of the business, and work on that with the team. But we have the advantage of being able to fund that, and being able to do that, as opposed to some operators. It's a trade-off, right, between being able to employ an extra staff member to help you do a sale, or stick some money into human factors training. But yeah.
There have been a lot of good things that have happened, though, in the adventure activity space over the last years, which is really making it so much easier for insurers to buy in. So similar to what John's doing with his business, the industry has put together, the adventure activity standards, for example. So if you're involved in activities that there is an adventure activity standard for, then at least demonstrating your compliance with that activity, even as a small business, is actually relatively simple, because you now have a framework to be able to follow and do. So, things like knowing that those activity standards exist, and at the end of the day, knowing then what other obligations, whether they be work cover obligations, employment practice obligations or whatever, making sure that you can be as compliant as possible as a business to represent yourself as professionally as possible. I think, look, I've come from the industry. I ended up in insurance by default. We're all very passionate about what we do, and we've just got to remember that we're in the people business, and our job is to actually engage with people, entertain people, and keep them safe, because they're expecting us to be able to do that. So, if we understand that we're in that people business and we focus on the people that are coming through, ensuring that they get the maximum benefit from that, ideally then, things will work the right way. It's when we try to make shortcuts or we try to miss out on those things. So I think that's a really good piece of advice, John. Even though it's on a smaller scale, we've got to really weigh up, okay, what is best practice?
Other ways you can change your actual business operation as well. So one way to bring a premium down is to de-risk what you do. So in the case of live music venues, stopping alcohol sales at 12 a.m. is one massive factor. If you close at 12 or stop serving alcohol at 12, your premiums drop significantly. If you have a restaurant as a part of your business, that also impacts, because you're serving food at the same time. We have the example of one of our members. Their premium went from $10,000 to $135,000 in 1 year, one big swoop on public liability. And the reason being is that they had a beer garden and bar and a live music room, but then they had a nightclub attached to it, but you actually just walk through the same building to get to that nightclub. So we changed their business structure, that we put in a wall and made people come out of the business and go into another door to get into the nightclub. And that totally changed the risk perception of the underwriter, and we brought their premium down to $65,000. Still not fantastic, but half of what they were being charged. So you can look at those novel ideas about, okay, what can we do to move risk around in our business to make it more palatable for the underwriters and insurers?
It's good, but it's also kind of sad. I mean, it's sort of, if you think about a lot. I mean, this morning there's been a lot of chat about the competitive dynamic, and I've just been spending a bit of time in different parts of the world recently, and if you look at the competitive dynamic against the destinations that Australia, Queensland compete against, they don't talk about serving alcohol or live music venue at 12 a.m. They don't talk about shutting their restaurants early. They're 24-hour economies, and I think sometimes, like, I agree with the sentiment, we have to do the same across our business. But it kind of, sometimes I think we get to that point where we're almost over-regulated, and you go to places like the Amalfi, and we were on this tour. Old mate got out of the bus and he was standing up on a wall, no high-vis vest, no witches' hats. He was safe. He got the bus out the back. You do that here in Australia, you'd have 3 staff. You'd have this guy rigged up into a belay rope, like, being up in Sharpie's Vertigo, like the Golden Bachelor was the other week. But that's the thing you get. You sort of say it's great, but at the same time, it's kind of sad, because we're in the industry of giving people great experiences and fun. Yes, we've got to be safe, but people do bungee because they want to, scare the bejesus out of themselves. Same with a tandem skydive. So, what are we going to do? We're going to start, making them do jumps from 2 feet off the ground out of the aircraft to make it safe. It's kind of...
And this is, I think, a really critical part of the discussion that's got to be had. We should be, Australia has got a rich cultural heritage in the outdoors, and we should be trying to preserve that at all costs. I think it's really important that we seek out an insurer that is going to insure what we do. We shouldn't be doing what they insure. We've just got to somehow work towards that bridge. But I think we should not lose sight of what you've just talked about.
But do you think, just taking that point, do you think that they get to a point, you said doing what they insure, do you think you ever get to a point potentially where they just start taking things off the list? So do you think that AJ Hackett would have set up Bungie today? Would have taken him like 25 years with all the great intentions of the world. It really would have. And he probably wouldn't have got insurance for it. So I just think that there's this piece around, and we won't solve it this afternoon. I know we're not supposed to talk about theory, but there is this place where we are in the business of giving people fun, very safe environment, but we get to this point where it becomes very, very difficult to start new products, and we're competing against nations that, I can tell you right now, they don't have these same imposts.
And that litigious nature of unfortunately, the Australian society is contributing largely to that. And so trying to stand up, I tell you what, you're north of the border, try coming down to Victoria. If you want to see what a...
I know, we've got businesses down there.
Yeah.
I feel like the killjoy here, but it's sort of, part of it, is it in trying to do that, it's making sure you do have those risk registers, those safety things in place, that you can then still provide those great experiences. Is that the trade-off? Is just making sure you've got that preparation and you can demonstrate that to
It is to a point until an actuary sitting in an insurance company plugs a number in of probability and the computer says no. That's the issue, and I'm not trying to catastrophize it, but that's what's happening. And so I think from that perspective, that's all great stuff, and as much of that preventive stuff that you can do. But ultimately, the decision by the insurer comes down to, an actuarial decision, and usually a computer that looks at a formula and probability and spits out a number and says yes or no.
Yeah, I think I'll just add on to that, Johnny. Yes, it all comes back to claims. So anything that you can do within your business and your risk mitigation strategies will have an impact. And it may not be next year, it may be 2 or 3 years down the track where you have less claims, and then the actuaries take notice. They go, oh, hold on, these guys have got their act together. Claims have dropped right down. Let's start working on some premium adjustments as well. So I think the risk registers are really important, but I think more importantly is that you've got to bring risk mitigation into the business DNA of what you do on a day-to-day basis. Really critical that you don't just think about risk when you've got your insurance premium bill and go, holy cows, this is massive. You've got to go every day. Toolbox meetings every day must have some form of risk mitigation review. Walk through the business. Is there a tile that's broken? Is there something that needs to be taped down? Do those little steps and record what you do, because if you do have a claim and you are sued, at least you've got some backing to say, well, we've done all of these things. What else can we do to make this a safe environment? And I'll lead into an example. We had a patron threw a glass of wine at her boyfriend. They were having an argument, threw it at his face, and she immediately slipped over in the drink that she threw. She sued and she won. So there will always be claims, and you can never avoid having a claim. That's going to happen. But the more you can do to make it safer and present and have the data to prove that you're doing that is paramount.
I think making sure, just to make sure that, because we should keep it positive, because there are actually insurers that do specialise in this adventure activity space, and sticking with them and getting engaged with that specialist insurer is critical, because as I mentioned, in the soft market, you'll have insurers coming into the market offering a cheap product, but it's not sustainable. So we need to make sure that we do still support those who are and have been supporting the industry over time, so that there is that premium pool that a large business can actually draw from. As smaller operators, we need to make sure that we stick to the insurers that are going to stick by us, and making sure that there's that longevity. People have claims. Insurers expect you to have claims. And so, if your insurer is going to say, oh, you've had a claim, we're not going to insure you anymore, that is a major red flag in my view. You know, you've got to be with someone who's prepared to say, right, you've had the claim, let's help you work through it and get out the other side.
Yeah. Just on that, so what are some of the sort of takeaway actions that people can do this week, just where it comes to sort of, I think we mentioned earlier when we were discussing some of those things on your website, if you're promoting unsafe activities, the underwriters are watching.
Absolutely, 100%. So the moment that they receive a proposal form, they'll go straight to your website and they'll look at Instagram, Facebook to check out what's going on. So yes, you might have a website that's squeaky clean, everyone's got helmets on and life vests and it all looks good, but then they'll go to the actual Instagram shots where people are swinging off trees, riding on horseback without helmets, in a bikini, etc., getting the Instagram shots. So it's really important that you filter those as well, because you have control over anyone who's tagging you. You've got control over that. So just make sure you're presenting yourself in the greatest light you possibly can, because underwriters are watching.
Paul, I think you were mentioning that you had women in bikinis riding horses on Instagram, but it doesn't really happen in action.
Well, I haven't found it yet, but I'm still looking. But I think that's a really good piece of advice, is to make sure that we actually represent what we do, and making sure that we give an accurate description. And when we go and partner with a broker and they're going to present to the insurer, let's make sure that we present all of the things that we do. You know, be proud of what we do, be honest with what we do, and get it out there and make sure that they're aware of it, because we are asking them to insure our business, and these are the things we do. Trying to hide them behind there is not helpful.
No, we for tandem skydiving now, we just put photos on Instagram of people on the ground just getting on the plane rather than getting out of it. But it's pretty hard because, again, it gets back to the customer.
No bikinis.
Hey? No. So it's pretty hard because you've got a customer now that just, you know, they get shots of their friends and other than they post it and it's part of the fun. And so, but I think, you know, to that point around those preventative activities that you can do, the way that you present it, you know, we put information on about safety. We do safety briefing videos, you know, for all of our products. So it's all of that, but it's a difficult environment, right? Because you've got this litigious customer, but you've also got a customer who can, you know, they're one-person media companies in many respects. So
I'll probably add on to that. When you're representing yourself, don't misrepresent yourself as well. So don't say we do one activity when you're doing the actual opposite of what you do. Because if you do have a claim and it's a sizable claim, the loss adjusters, forensic accountants and insurers, they'll start investigating and they'll say, hold on, you're providing a risky service that we had no idea about and we wouldn't have insured you if you had, so they'll deny your claim. Then it's back on you to cover the costs, the public liability costs and damages.
Just one quick reminder, just if you have any questions, please start popping them into the app, because we'll move to that very shortly. But just a quick one, just on sort of, you know, I think we were talking earlier also just about safety metrics, the things that you need to be tracking, as well as tort reform was the other one.
Yeah, I might jump in just on the tort reform piece quickly.
All yours.
Yeah, so tort reform is all about the Civil Liabilities Act, which kind of governs if you have an accident, how you claim and the time frame that you have to actually lodge a claim and go through that legal process, which is up to 6 years. So you'll find that you may have had an event 4 years ago, then suddenly you've got a letter of demand or statement of claim from a no-win, no-fee lawyer, and you have no idea what it's about. You might have staff that have been long gone, you don't have any more CCTV footage, and it's by design that they do this. So one of the big pieces that we've been working through with the Insurance Council of Australia is on that civil liabilities piece it's not an overnight process, unfortunately, but is to actually change the legislation to make sure that when someone is injured, they've got a time frame to actually advise that you've been injured. Doesn't mean that it stops them from claiming. We don't want people to stop claiming, because they're there for a reason, and no-fee lawyers are there for a reason to look after the little guy that can't afford to look after and defend themselves in this process. So they have a part in the industry. But we need to get every state and government to actually agree to this, to change the timeframes of when claims are notified, and also the payments of severity of an accident. So if someone falls over and breaks their hand, they put a dollar limit on it, not to say how good the lawyer is to negotiate a settlement.
I think for those of us who are as old as I am, you can look back to the old days where insurance was something that we really was a port of last resort. And we had insurance, and if everything went wrong, then there was something there. And the intention of that was to make sure that we could look after the person that we unfortunately caused the incident for. So it was a fallback position. I think the pendulum has swung completely the other end, and it's becoming the first port of recourse, and that's put us into a large situation. This tort reform idea is hopefully to try to get it to go back to what it was. Is that sure, if we've made a mistake, and we've messed up in some form or other, then we're able to then provide compensation for that person that we've done that for. But getting people to be responsible for the inherent risks of these activities that are there, that is imperative if we go forward. People have got to be able to take responsibility for that. And unfortunately, my father used to use a thing. We had to make things idiot-proof because foolproof wasn't good enough. We have almost gone to another step. And so trying to get that understanding, and unfortunately this is where you've actually got to tell people when they go up in a plane that you've got to have a parachute to get down. It seems obvious, but...
Didn't realise that.
Yeah. We've just got to understand how we express and expose the risk that we're putting people onto, because for some reason they choose to go horse riding, but they weren't aware that the horse is a powerful animal, can run at speed, change direction at any given time, spook at some piece of unknown shadow, and has the ability to kick and everything else at the same time, yet can be also a source of great joy and education. We've just got to get somewhere that ability to get the inherent risk of these activities accepted by the participants.
Add on that the insurance industry is data driven, and one of those things, of course, is claim numbers. So we've got to try and, even if there is an incident in your business and an event has occurred, is that try and not let that get to a claim position. So if there is an accident, don't put the person in the ambulance, dust your hands off and say, oh, that's the end of that one. No, that's the start of the process for you. You've got to stay in contact with that person, ensure that they're okay, provide that guidance and support where you can, because anecdotally the evidence is there. The more you do that, the less inclined that they will make a claim against you. Yes, there might be an insurance claim, but it's not inflated by the ridiculous legal fees that might be thrown on top of that claim. And that's the key, is just reducing. There's going to be claims, let's just try and reduce the value of those claims. So the care starts when they walk in the front door, but also when they leave as well. We've had examples of a bar in Canberra. A person was intoxicated. They weren't allowed to come in. The bouncer stopped them and said, no, you're not coming in. 30 metres down the road, they were hit by a car and they sued. And they won, because the judge said that you owed them a duty of care because you knew they were intoxicated. You need to look after them. So this is the pre-care. So even though you don't think it's your responsibility, you need to have that ultimate care for that patron who could have come into your business.
So going that extra mile.
That's great. Yeah, go the extra mile.
Yeah. We might move to questions from the audience, if any have come through on the app, which I'm not seeing any flash up. I'm sure there's people out there that have
We've
questions.
adequately terrified people,
Yeah, exactly. I suppose one of the things that was mentioned earlier, here we go, we've got one here. So do you have any recommendations on how small businesses can manage insurance premiums increases in post-natural disasters for cyclones and all of that, all the premium increases there? They're going massively up. So how do small businesses navigate that side of things?
Oh, I think it's really difficult, and I think it's not something that any of us up here could sit and say, here's the solution. But I think from our learning has been the whole area of competitive tension. And certainly from us going through this process we just went through, we were able to drive, some really material savings for our business. So I think that's, one area. I think on the issue of New Zealand and the caps, that horse has bolted. it's out through the bottom paddock and it's gone, because it'll just never happen here. I mean, it's the way it happens in New Zealand is that, employers, employees, businesses contribute to the Accident Compensation Corporation, and they basically take it's no fault liability, and they basically take on the rehabilitation medical expenses of an injury. I just think that, to your earlier point right at the top of the session, let's not try and talk about things that we can't deal with, and I think that's one of them, sadly.
On the preparation, or the previous question there, preparation is really critical, and making sure that we understand what we want to get out of insurance. And that particular question before was more focused on, like a natural catastrophe taking place. So there's been damage to property and doing. So trying to prepare for that beforehand and having realistic expectations. What do we need to do in order to get our business back and running? So we can start to limit then, perhaps what we might be asking of insurance to do. And so preparing beforehand, making sure that we're ready for these things when they occur, and then in the event of something going wrong, also being prepared to how we're going to respond is a critical piece, and knowing what we expect from insurance to respond. I know a lot of people sort of are caught in that, and this is where, without getting that right advice, knowing what they can do, they've ended up being underinsured because they've said, oh well, we want to limit our premiums, and then of course not understanding that means then in the event of making a claim, your ability to claim is limited by law by a percentage of that. Knowing what we want to insure, why we want to insure it, and what the outcome is to get our business back up and running, what do we need most of all, that they're thinking of those things beforehand so that we're then ready in the event that it occurs. That can make a big difference.
Yeah. What about Mary from Capricorn Enterprises was asking just about the caps that occur in New Zealand for insurance caps. Is that something that would ever happen here in Australia?
No.
No.
That's a no.
No, look at it, and it's like a lot of people raise it. I've been in meetings with ministers and people have raised it. It's just not going to happen. So let's not waste time on it. I mean, it's gone. It's a very specific, bespoke system. It's a ripper, but it's sadly not going to happen here.
I was speaking with Tara Bennett from DestinationQ just outside, and she was sort of saying that, like, for a lot of small businesses, they want to provide these amazing experiences, but the insurance premiums and the fear of those costs involved is making some of those experiences more vanilla, or what you were talking about, John. It's sort of like not offering that exciting kind of option. How can we move around that? Like, because we want all these amazing experiences in the lead up to the Olympics and during the Olympics. How do you work with insurance companies to make sure that you can still do those things?
I think it just comes down to what we've been saying this afternoon is around working with insurers, working with landlords, working within your own businesses on those measures about what it is to do. But I think it is kind of now a sad reality that it is harder to start putting adventure activities into, like during COVID we were 5 minutes away from having a parachute landing area at Randwick Racecourse and a skydive over Sydney, but it just became too hard with a lot of the regulatory imposts on top of it. But I think just back to that point before, it's around all those preventative measures that we've spoken about before.
And that's, again, that goes back to making sure that you've got a specialist insurer. Like, skydiving is a specialist area. The adventure activities, canoeing, kayaking, canyoning, abseiling, bushwalking, four-wheel driving. There are insurers that are comfortable with those risks. So back those guys who are going to enable you and can work with you to maximise those experiences. Don't ask that of a general insurer, because you're just going to get disappointed.
We've also had a question just around the insane insurance premiums for islands and those kind of impossible insurance rates for the islands and some regional areas. What's the solution for that?
Oh, I might jump in. It's a very, very difficult one. What the industry do, they look at where their claims are coming from and the amount of premium pool that they'll gather from that certain part of the industry. And if they see that you are islands and yes, you are going to be cyclone prone and the value of those claims, they will price the policies accordingly. And as building costs, especially after COVID, building costs doubled, and that's had claim cost pressure. So your premiums are following that. So unfortunately, it is an inflationary impact. I don't have the wand to actually give you the solution.
That's possibly the hardest question you could ask this panel, Craig Davidson. It's a nightmare of a question. You should be up here to try and answer that, actually. Smart ass.
I'm not saying anything.
Yeah. We've had a follow-up sort of question along those lines. So Sean from Fitzroy Island is asking about sort of large hotel chains are now providing insurance for their own hotels. Are we likely to move this way, is his question for hotels in North Queensland, given it's so unaffordable?
This was mentioned before, the building of discretionary mutual funds, some people looking at self-insurance schemes within groups and doing. I think all of that is a legitimate, attempt to try to find a solution to the problem. What I will throw in, though, is that what you're doing is then coming out of that other specialist pool. So if you can be working with someone who is working with hotels, working with those insurers and if we're taking money out of that pool, then we're reducing the ability to find a solution because, again, there'll only be a few insurers that are around to stay. If we keep using general insurers or other alternatives, then we're spreading the premium pool. To be frank, our country isn't big enough to spread that pool too thin. I know it's good to have competition and you want competition. I think that's important. But we need to limit the amount of competition we've got because you've only got so much to go around. And so spreading that between 2 or 3 insurers could work. Spreading it around 4 or 5 insurers is going to fail. If we start pulling things out of the premium pool, then we've got to recognise that is going to have a flow-on effect.
We might close it there, but first we'll do that lightning round, lightning close. So if each of you would like to give your big key takeaway of, one lever that operators can copy. John, would you like to go first?
Safety, preventative safety.
Beautiful, very quick.
I'm going to say the same as I've said all afternoon. A specialist broker with a specialist insurer. Ask the broker, how many clients have you got in your area, like in your specific activity area? How many clients have you got in that space? And if it's 1 or 2, see if you can find someone else.
Yeah. Andrew, one pre-claim system that reduces both frequency and severity.
It's really data, how you present yourself and how you manage yourself, so the best practice. So having systems that enable you to give your staff a workflow and process to follow in terms of ensuring that your business is run the best it possibly can and reduce those risk elements on a day-to-day basis. I might just throw in another thing too, very quickly. I know we're at 0. Fiona from Griffith University is doing a survey. She's doing a PhD on insurance. So it'd be fantastic if everyone can go to the Griffith Uni table and partake in the survey that she's doing, because all of that data, and we need data, gets compiled and goes to the government, but also goes to the insurance industry as well, and gives them a really good picture and understanding of what we're about.
Brilliant. Thank you so much for your time, guys.
Pleasure. Thank you.